I think it's almost impossible to answer kind of definitively. You can expect a certain amount of return. Certainly if you're investing in market listed or tradable securities, the price can change on a daily and hourly basis. So kind of working out what your predicted return is going to be is very, very difficult. One of the best ways to kind of answer this question is to draw from history, to sort of work out what kind of investments tend to produce what kind of return on an annual basis. And one of the sort of the best bodies of work and best research papers is the Barclays Equity Gilt Study, which really comes out on an annual basis and tries to make sense of what investment returns are possible on an annual basis. And if you look historically at the UK, for example, broadly speaking, over the last 100 years or so, from the equity markets, you can expect about a 5% return. From the government bond market, you can expect about 1.5% return. And from the cash market, you can probably expect just shy of 1% return. Obviously, this changes year on year and decade to decade, but over about 100 years, that's about the return that those three types of investment have been producing. In the US, it's slightly higher for equities. The US market has been producing about 7% a year for the last 100 years. And its bond market, the government bond market, the treasury market is doing about 2.5% a year. And the cash market actually slightly less, about 0.5% a year. So broadly speaking, that's what those three asset classes will give you year on year. But again, it is impossible to sort of say with any certainty that is what you're going to get year on year. There'll be years where you get a higher return than that, and years when you get a lower return than that. And that is the nature of investing. And I suppose the primary reason why we always talk about investing for the long term rather than the short term.